Hey, what's up, guys? It's Ezekiel Chiu here. So, you know something? Most people are using the RSI indicator the wrong way. So, they think that it's just about spotting the overbought or oversold zones. But there's really so much more to it. You know, the RSI, for one thing, it allows you to identify the trend. So as we know, right, the trend is your friend. And this important too, it has a setting that you can unlock to tell you exactly the trend that the pair that you're looking at right now is in. And not just that, it creates pinpoint entry locations for a group of trading vehicles, which I'm about to share with you, that has a really high win rate. Okay, so first off, what is the RSI? The Relative Strength Index, right? The RSI is a tool that measures how fast and how much that the price changes, whether is it stocks, whether is it Forex, crypto, commodities, whatever, right? How fast that vehicle price changes. So it helps investors, traders, they figure out if, let's say, that vehicle is overbought, which is too high, or oversold, which is too low. So this gives you, right, pretty useful hints for when to enter or exit a trade. This is, in general, how most people use the RSI. So let us see how can we set up the RSI first. All right, so now the RSI typically is set to show the overbought when it hits the 70 level and the oversold when it hits the 30 level. So most people think that when price gets to this level, it will continue in the opposite direction. On the other hand, when price reaches this point, it often moves in the opposite direction. So while that is true, it doesn't really fully reflect what price does. So what I would like to do is, when you are setting up your RSI settings, right, what we want to do is to get rid first. Get rid of the upper band, the middle band, and the lower band. And also like remove the RSI background. So depending on what trading platform you're using, right, whether you're trading View, whether you're trading MT4, whether you're trading your own broker's platform, the settings are plus minus the same. So just remove all these levels, remove the background. So now, this is how you can increase the probability of your winning trade. Using the RSI indicator with the trend, it's going to boost your chances of success big time. So when you trade in the same direction as the trend, you are aligning yourself with the bigger moves, which often has what? Bigger profits, rather than you're trading against the market with small pullbacks. Plus, the trend tend to keep moving in the same direction. So if you stick with them, the odds of getting all these moves with big RR is going to be there. Am I right to say that? Yeah. But first, how do we define a trend? So a lot of traders, they rely on concepts, which is good, like higher highs or higher lows, or lower highs and lower lows on the other side, right? So, but these methods in a way can be subjective. So now I'm going to show you a more objective approach. So here's the thing, the RSI, they compares the average gains to the average losses. Okay, so here's the key, the structure, right? If the average gains is more than the average losses, the market is in an uptrend. If the average losses is more than the average gains, the market is in a downtrend. To apply this concept, here's the setting, right? Here's the setting. You can use the 250 period RSI. Okay, so this represents the number of trading days in the year. Depending on the vehicles, you can also use, that's where a little bit of back testing will help. Like for example, you play around, you can also use a 200, you can also use the other settings. That's where a little bit of back testing will help to see this specific pair, which setting works the best. All right, so in general, you can use a 250, you can also use a 200, right? So here's the rule, the RSI above the 50. Okay, so when that happens, it indicates that the average gains is more than the average losses. So meaning to say that the market is in an uptrend. So what we got to do, super clear cut, we look for buying opportunities. When the RSI is below the 50, this shows that the average losses is more than the average gains. So signaling what? A downtrend. So in this case, we are looking for selling opportunities. So by applying this method, we can now really objectively define the exact trend so that we can now use our strategy in line with that trend direction. So now take a look at this. I've drawn this blue line over here that marks what? The RSI at 50. Okay, so whenever the market is above the line, right, it indicates what? A long-term uptrend. On the other hand, if the market is below the line, it signals what? A long-term downtrend. So looking at this market, you can see that once the market moved above the line, it entered into a strong uptrend, right? This is because, right, the average gains is larger than the average losses. I mean, this is the theory, how the whole formula is built behind the RSI, all right? So this confirms there is strong bullish momentum itself. Now, let's zoom out a little bit. So you will notice that when the market trades below the blue line, indicates that the average loss is more than the average gain. This signals what? A long-term downtrend. So using the RSI indicator, you can now pretty much easily, right, define the long-term trend. So it's super clear, it's super objective. There's no maybe this, maybe that. It's super straightforward. There's no need to guess whether it's a higher high or higher low, that kind of thing. Simply just mark the 50 level on the RSI. All right. So now that's where you can trade in the direction of the trend. So now how are we going to trade in the direction of the trend now that you have identified the trend direction? This is where we're going to move on. Do you know what pairs, what market, what vehicles, what assets does the RSI work best at? You know, through studies, I found that the RSI indicator, it works the best in markets that goes up in the long run. So for example, the stock market, for example, such as the indexes such as S&P 500, the Nasdaq, commodities like gold, right? Anything that holds value, it goes up overall. Blue chip stocks goes up overall in the long run. And why does the RSI work so well? There's a reason for it. So the stock market and all the stuff that we talk about, right? Gold, etc. It tends to move up over the long run, correct? So whether you are looking at the S&P, the Nasdaq, or other indexes out there, you can see that they are higher now than when they started, isn't it? Right? So that's why Warren Buffett always say, right? If it's anything, just buy the what? The ETFs, right? The S&P. So this what reflect the overall economic growth. Over time, economies improve. I mean, there's always dips, but overall the market keep improving. The market rise as we go along. Now, of course, when the market goes up, there is always what? Pullbacks, right? There is always pullbacks. Sometimes they are quick, they're fast. Sometimes they're sharp, but they don't usually last long. Eventually the market gets back and then pulls back on track to continue moving upwards, right? So this is where the RSI indicator would come in. So during all this pullback, when the market is in different categories of how you want to classify the market, and there's period of time whereby there's pessimism and there's extreme pessimism, the RSI can then spot all these really good buying opportunities, locations. So this moment, all these dips, these are moments where people a lot panic, fear, greed, right? A lot of panic selling. And this will create the best time for you to take the other approach and buy when the prices are low. So as an investor, as a trader, if you trade the stocks, if you trade other vehicles out there, these are the prime spots for you to get in as a whole. The best way is we want to, in a way, time the entry to be as low as we can during these pullbacks, right before or right when it's about to go back upwards. So now, here's the settings that you can use. You can use the 10-period RSI. The 10 period is kind of about the last 2 weeks of price movement. You know, by default, there's the 14 or the 15 or the 10. You know, it doesn't really matter. When the RSI, it dips below the 30 level, what happens is that it signals a very strong selling pressure. So it could hint at buying opportunities. But hey, don't jump in right away. We use this as a sign, as the first signal to watch the market and to wait for confirmation that the buyers are stepping in. Because if you drop, it can keep dropping. So we want to wait first. So that's where we can time our entry by waiting for price to break in a way. Let's say if you're trading a stock, the previous day high, or we can find bullish candlestick pattern. So now, the key is to be patient to avoid being caught in deeper pullbacks. Okay, so now let's take a look at this chart. So here, we will put the 10 RSI. So now, if you see that the RSI, it rarely falls below the 30. But when it does, it often shows what? Very strong bearish momentum. So this can be a good chance for you to spot all these pullback opportunities. As the market, what happens? It usually bounces back after which. So when the RSI falls below the 30, it shows that the market is pulling back, especially in an uptrend. So shorting at that area is going to be risky because the market usually bounce back. So instead, we look for buying opportunities. However, we don't just want to buy blindly, right? We always want to wait for confirmation to avoid further drops in the market itself, isn't it? So what we got to do is we wait for the market to show the strength, okay, before we enter the trade. So what you can do is to place what? A pending order, a buy stop order above the previous high. So this would confirm that the market is going in your favor. If it does, right, it will hit. If it doesn't, the market is falling and there's no entry. So it helps you to avoid entering too early if the market doesn't go up. So now, when the market breaks above the previous day high, that's where you can set your stop loss where? Below the lowest point, the swing low. So this way, you can position yourself to catch a major reversal upwards. This pullback trend continuation. So that's why we place the pending order above the high. It allows you to confirm the upwards momentum before you trigger the trade itself. So now, here's another example. So at this point, the RSI dropped below the 30, but the trade didn't work out, right? The market moved up a little bit, but then came back down, reversed down, resulting in what? That trade to be a losing trade. However, at the next point, the RSI is again below the 30. So if you have placed a buy stop order, the pending order above the previous day high, that's where you would have caught the move upwards. There we go. We talk about the two entry options, right? When the RSI is below the 30. All right, so number one is for price to break the previous day high, place a pending buy stop order. Number two is to wait for a bullish reversal candlestick pattern. That's where you can time your entry specifically. All right, so to confirm, to reinforce this approach doesn't work in all the markets. The stock market, the blue chip stocks, right, the indexes, gold, etc. Right, it has to be in such markets whereby they are unique because it's a long-term uptrend. And pullbacks tend to be what? Pretty short-lived before the trend resumes again. So you see, for example, this example, right? This is say a Forex pair. It remains oversold for a long period of time. And the market keeps dropping. It remains oversold, the market keeps dropping. So it doesn't mean that it's at the oversold zone, you just go and blindly jump in, right? So that's the thing. You don't want to blindly jump in when it's below the 30 or blindly sell when it's above the 70. Remember, the RSI is just a momentum indicator. It's not a direct buy or sell signal itself. Okay, so that's where you want to use it on the other vehicles that we talk about. For example, the stock market. That's where the RSI is effective to identify all these periods whereby there's pessimism, extreme pessimism, for you to time the entries to be aligned with the bigger market itself. All right. To wrap it up, the RSI works best on pairs or assets or vehicles that goes up in the long run. Or if you see that there's a vehicle that is trending right now, that's where you can use it. Okay, so that's where you can use the RSI to first identify the trend using the blue line, right? To first identify trend, and then you trade along with the trend, and then you use it to identify pullbacks to allow you to point out the crucial buying spots for your entries, and then you can combine the RSI with other entry confirmations, for example, candlestick patterns, right? Rejection levels, etc., to increase the probability of the trade working out. Good? So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.